with some more RTD News updates. And as you can tell from today's title, Congress is coming after your 401k. America's pension crisis is getting worse. I'm going to be covering several different articles, all dealing with the ongoing pension crisis we're experiencing here in America and what is to come. And so we're only 4 days into the new year, and already we have news about countries deciding to remove themselves or rethink the dollar, or aka dump the dollar. President Erdogan in Turkey tells his citizens in order to help the country out, it'd be in your best interest to go under your pillow, grab the dollars, the euros, and gold. And as you tell from today's title, how the baby boomers will lose their retirement nest egg, I want to share with you a couple thoughts as well as some articles on how the next market correction will be catastrophic for a lot of people. Always cash crisis worse. About Venezuela once again. Systemic important banks. They removed the 1,000 monetary awareness.
Hey there, hope all is well. Back at you today with a little midday news update or end of the day news updates. And so came across a couple of very interesting articles that I thought I would position before you guys before this weekend, and just shine some light as into how this is really still in the beginning phases. And so I got a couple articles here talking about Steve Mnuchin is just starting to really play out the narrative that more stimulus relief will be needed soon, as well as Trump is gearing up for more campaign speeches or whatnot, also suggesting that relief for the people is needed. While on top of that, the Federal Reserve is buying up everything, and it looks like a good portion of the things they've been purchasing happens to be in the mortgage security realm. So I want to share a couple articles that caught my attention, as well as check in, see what else is going on, and see how everyone is doing this Friday afternoonish, and go from there. So before I dive any further, I want to encourage those that are first-time viewers of the channel, make sure you click subscribe and the notification bell if you want to be notified. And also on the alternative media side, there's a couple options here that I want to encourage you guys to connect with me on as well, just in case one day Rethinking the Dollars no longer on YouTube, because how things are going nowadays, you never know. So let me check in via chat, and then I'll dive into some of the articles, share my thoughts on it, and then put it in the chat for you to dive further if you're interested. So we got Philman says, hey, we got low blood pressure. Corpus Christi says, question, how much longer do you think before the open states close again? They are talking about a second wave coming this fall. Philman, great question there. My personal opinion, also following what's happening in China now with the additional shutting down of the northeastern part of China. From what I've read, about 100 million people have been re-quarantined. So I would imagine the U.S. may follow suit, and so I would imagine they'll probably try to do their best to keep this thing open throughout the summer, and possibly in the fall, winter time, look to shut it down again. Would be my best guess, but I'd imagine no matter what, Trump really wants the economy to open up because his second term depends on it. So I'd imagine, regardless of what the cases might be, if it wasn't for the mainstream media scaring the heck out of people, I'd imagine a lot of people would not be so concerned with the cases and numbers and things like that. They would just somehow, some way attempt to go back to their normal lives, outside of the fact that, most of the employment situation will continue to grow, or unemployment rather. So that's just my personal opinion. Curious to find out what you guys think. We got Spirit King, we got Joe, we got Vutran, Benjamin, we got Keston, Lost for Words. Okay, so good amount of people here. Appreciate you guys for taking time to join me. Just want to share some articles, share my thoughts, and get your take on it as well. Albert says, where does the SLV Trust get all the silver from? I think that the SLV Trust is more digital and paper in nature than actual physical. But it's sold as being able to be either converted to silver or having silver in the backdrop. But at this current moment, I would imagine all those promises and the typical ways that those products are offered are being tested and challenged, because a lot of people are looking to get physical. So I wouldn't be too confident saying that there's actually a lot of silver for the amount of claims out on that silver in those vaults. So JS says Trump will keep the country open, but it's up to the individual states to decide to close down. Right. So Trump would prefer that all states were relatively open, but yet you have those states that are anti-Trump and probably pro-Joe Biden right now that might be collaborating on how they can disrupt any momentum from the Trump campaign. And so I can imagine, especially here in Michigan, just the fact that it looks like the Supreme Court did not overturn the governor's, as some people say, the abuse of power, saying that there's no need for Governor Whitner to have to get permission from any legislative authorities or whatnot to keep the state locked down or to reopen it in those phases that she has it set to reopen. So, unfortunately, everything we're going to experience is going to be politically motivated. So whether the cases are increasing or not, politics comes first in this current year because of the campaign and all the things that's taking place behind the scenes. But let me stop rambling and get right into the articles and go from there. So, reason I thought I would share this about mortgage-backed securities is because this article here, which caught my attention on top of some other things. Let me open this up here so you guys can see it. And so outside of, the Federal Reserve's actions, they're purchasing everything. Got an article mentioning just some of the details of what's going on. But we're not hearing the full shebang as to what's being purchased. And so Octavio Costa, one of the previous guests on RTD, does a good job of putting together some charts or whatnot. And I'm going to share one with you shortly. But here's an article came out today out of the Houston Chronicle. It says commercial mortgage securities may be the next flashpoint. When I saw the words may be, I'm like, uh-oh, they already are. And then just this picture here, it paints a good picture as to what's going on in, I'm assuming this is in Houston, but imagine in every other city and even here in the Metro Detroit area, they've been doing a lot of development off a lot of major highways here, setting up those little small kiosk shops. And I'm noticing a lot of, for lease signs on all these buildings as they're closing down. So that's, somebody's liability out there. So here's a picture here I thought I would share. It says the office building was purchased with a $91 million loan that was packaged into a commercial-backed security. It says the property has entered foreclosure due to the high vacancy rates. Its problem preceded the pandemic and its resulting economic crisis, but as a cash-strapped commercial, tenants are missing lease payments. So this is just one building, $91 million in Houston. So imagine in your area, wherever you live at, especially if you're in a major city, I tend to pay attention to signs and everything of that nature. So there's a lot of buildings in my neck of the woods that lease signs are everywhere. And imagine there's going to be a lot of things that's not going to be paid upon, and that's packaged together somebody's asset, which ultimately, with mortgage-backed securities, are liabilities in and of themselves. But so the Federal Reserve is going to get involved heavily. So just give you an idea here, just thumb through it briefly. It talks about the changes not only pose threats to the companies that build and lease office towers, retail centers, industrial complexes, and apartment buildings, but also the banks, life insurance companies, and pension funds that invest in them. So you got all those methods that they've put together, ways for people to so-called earn some yield on their investments, but yet they're packaged in things that are going belly up right now. And this building here, as they mentioned, was well before the whole pandemic started. Then we had Federal Reserve Chairman last week talking about we're not facing any type of real estate issues or banking issues. It's solely because of right, okay. And then just to piggyback off that a little bit, let me share with you something else that I was going to get to. But look at this chart here. This is the public view, but the Federal Reserve has surpassed $7 trillion. And so once again, if you have been paying attention, which a good portion of the audience has been, you would see here that September is when the piping of the monetary system officially sprung a leak. And now it's just gushing out to where now it's $7 trillion and it's no going backwards. So just something there. And so this is just a situation here in Houston, but the title caught my attention. And I'd imagine that everyone in their cities have areas where you can pinpoint some buildings, some office spaces that have been vacant for a long period of time. And given the fact that commerce has changed to where, e-commerce now is taking over, there, retail spots and all those office buildings and everyone now in the tech sector, especially out in Silicon Valley, being encouraged to work from home. So imagine all those empty office buildings that, are packaged together in somebody's portfolio. And so that's just what's happening on the surface. I'll check in via chat real quick and see what else is going on. Says Black Panther says, Mike, do you still have the Scary Georges? Yes, I do. They're still going out. And so go to rethinkingthedollar.com/store and you can get up on that. And also working on something because I'm a big proponent of trying to automate your weight. So working on something to make it possible for people who are interested to automate the Scary George process, have it sent to you monthly with no hang-ups or no issues while the silver is still available. All right, so keep it moving right along. Let's get to the next one. As always, highlight at Rethinking a Dollar if you got any questions or any thoughts you want to share. And we can go from there. You have the best live show ever. Kev, I appreciate that, my friend. Trying to just be a channel where people can share their 2 cents because we're all in the same boat here, heading in the same direction. Unfortunate thing is some people have life vests on and majority of the people do not. And so once we hit the iceberg, we're all going to be in the water. Now it's a matter of the rescue mission. How fast will it take place, if at all, and what will it look like? So, but anyway, enough of ranting. Let me keep moving. And so here's the visual aid I want to share with you. And this is from the Twitter of Octavio Costa, who does a great job of putting together visual aids. And so this is just a little demonstration of what the Fed purchases in mortgage-backed securities and how they attempted to sell off. And we see the decline here, but it says a total outstanding in U.S. trillions. And so here we are at the top now at the peak. They have, for some reason, and as it says off here to I'll actually close out of here. And so this just some of the wording that Octavio mentioned. It says the Fed just bought another $80 billion in mortgage-backed securities. And this was as of this is last day, the last 24 hours. It said it accounted for 77% of their stimulus this week. So 77% of the stimulus coming from the Federal Reserve happens to be going towards mortgage-backed securities. And I would imagine it's probably just primarily the real estate, commercial aspects is probably tied in there, but it's going to be more commercial as well. It says something is clearly going on in the real estate market. He said where there's smoke, there is a fire. And so just that visual aid there was like, wow, let me go ahead and just highlight something that, of course, we won't hear about it on the mainstream just as of yet. But as mentioned here, Federal Reserve is out there buying everything they can to prop this thing up. So I'll share this with you guys so you also can see the same visual aid. And of course, as always, if you have not, go ahead and follow Tavi. He does a great job of keeping us up to date with visual aids. So share that so people can see what's going on there. So that's that part there. Now let me keep going right along. So here's another article that I thought was worth mentioning. And it talks about some things that of concern for the banks. And so this was as of yesterday. Or actually a couple days ago, but it says commercial mortgage-backed securities trouble could reprise 2007 meltdown. And it's a real short article here, but it talks about major banks, including Wells Fargo, Deutsche Bank, and others have engaged in a pattern of fraud in commercial-backed securities that is putting the whole market at risk. And then it talks about why it matters. It was from a report. It says a report was published on the same day the Fed's financial stability report, which warned the commercial real estate market could be among the hardest hit industries from this current pandemic. The commercial real estate could be the hardest hit. And then I got an article also mentioning how with all the delinquencies and the real estate itself, there's going to be a lot of problems. And so it just talks more about some issues here, some stats, whatever. But it says, as a result, it alleges that borrowers have qualified for the commercial loans they normally would not have, with investors who bought securities birthed from those loans otherwise. So the fact we had extremely low borrowing costs forever incentivized people to go out and borrow and build with the idea that there will one day be people to occupy some of those positions. And unfortunately, a lot of people who got into that game did not realize that there were going to be some type of event that will prick that bubble. So here we are now, bubbles bursting, and the Fed is here to try to inflate it. And so here's the next article that I want to share. It says central banks buying $2.4 billion in financial assets every hour. Every hour over the last several weeks, $2.4 billion has been purchased. In other words, put onto their balance sheet, becoming their asset while they flood banks with currency just to cover some of their losses. And so, interesting article here. I'll thumb through it and leave more for you to read if you're interested. but I'm building up to where this is all heading. And it has to do with Mnuchin and Trump coming out saying that, more stimulus is needed. And of course, it's all covered up in the fact that they're trying to provide relief for you and I. But in actuality, what's behind the scenes is the Federal Reserve's balance sheets will continue to go up. And they're going to need a way to spin this off because they don't want to make it look like it's an outright bailout steal. So the special purpose vehicles and all that stuff they put together, they need to continue to make sure that those are well funded while also giving and dangling carrots in front of you and I. So it says central banks around the world have been buying nearly $2.4 billion in financial assets every hour for the past 2 months, according to the Bank of America. Suggested as of today, it says the bank's weekly flow sheet reports notes that around $4 trillion in financial assets from government and agency bonds to corporate and mortgage debt. It says have been hovered up central banks from Tokyo to Washington, helping drive a 15 trillion surge in the global equity market value over the past 2 months. So all those funds that has been flushed into the banking sector, they're making their way back, as it says here, to the equity market valuations. And so that's just more of the legalized counterfeiting nature of this banking sector and where it's heading. And just that number, 2.4 billion every hour. Can you imagine that? And the people, we're getting robbed at an alarming amount. And so from the interview I did earlier with Mickey Phelps, talking about how diluting the currency, like all these digits that are being pumped into the banking sector, dilutes all the savings that we have accumulated from hard work and just investing and whatever, as I mentioned, investing ultimately is turning into gambling with the activity from the central banks. But this is just some things I thought I would share. Of course, there's more details in there. If you're interested in going and get it for yourself, feel free to do so. I'll put it right here in the chat. You can go do that. So the question here, it says, D says, how is Deutsche Bank still existing? At the mercy of the German taxpayers, I'm sure. Because the Deutsche Bank, everybody knows it's the biggest of all the biggest too big to fail banks, and it's still around. I'm not sure what their share price is now, but once again, the German government will make sure they step in. Therefore, and what's the problem is how all these bailouts, bail-ins, or whatever, bailouts as of likely, they're all taxpayer funded. And I'm thinking, like, with the way things are going, there will not be enough people to actually tax, to so-called continue to call these taxpayer bailouts, because pretty soon, if unemployment continues to go the way that it is, and there's a restructuring of the whole labor force as we're witnessing, there's not going to be many ways to actually collect taxes. So I'm not sure how this is a taxpayer situation here, because you can attempt to try to tax people, but if people are tapped out, I don't really see people paying taxes there. So I'm assuming there's going to be some shifting in the tax mechanism pretty soon, because it's going to be hard to, as my grandmother used to say, it's hard to drain juice out of a turnip or something like that. One of those old adages that, anyway. Low blood pressure says, when banks lend you fiat, it's created from nothing, so you owe nothing back. Use the system against them, right. And that's another thing. Like people mentioned about a Jubilee coming. And when it comes to mortgages and credit card loans, those are loans that were created just from the mere signature being signed and the swiping of a card. And we've witnessed what happened in Canada with the forgiveness of, I forgot what bank it was, but they forgave the entire country. Everybody who had a line of credit with them was forgiven. So if the Federal Reserve and the government really wanted to try to ease some of the pinch on the public, they could somehow, some way forgive these loans. And then I also saw a article yesterday that came from a case study. Let me bring this up because I think this is worth mentioning. But there are some college professors that said that it'll be good, instead of passing another what you call it, a bailout stimulus package, that they should consider doing this. I'll put this on the screen. This is just something that came to mind that I didn't get a chance to talk about. But as opposed to giving outright stimulus, the best thing they're saying is give a $10,000 credit card interest relief, where you take the burden off of the borrower and turn some of that burden onto the government, relieving those that have taken out the debt up to $10,000, which would alleviate some of the pinch and pain on the concept of people having to get back into, paying some of that debt whenever this whole pandemic is supposed to blow over, when all those bills still come due. So I thought this was an interesting article or a study done by these college professors here that they believe Congress might end up considering at some point, taking the burden off the people and putting it on Uncle Sam's books. So just something right there to look at if you're interested. Okay, so let me keep plugging away, doing too much ranting, forgive me. Okay, so here I talked about what we're seeing in numbers. So this plays into the actual all-time high of the Fed's balance sheet, which is just the beginning. Fed's balance sheet top $7 trillion shows increased buying of corporate bond ETFs. So once again, the more that they interject all this fictitious, legalized counterfeiting funds, it distorts markets. There's no way of truly telling the value of anything. And so electronic traded funds, once again, another package program within the last, probably 30 years, give or take 20, 30 years, they're now buying those things. So what do you expect? What direction are they going to go in? Of course, they're going to go up in value, but what's really packaged inside of those things, I'm not 100% sure. But just something here says what happened. The Fed's holding in its corporate credit facility grew by $1.5 billion to $1.8 billion after the central bank announced last Tuesday it would buy corporate bond exchange traded funds. And so here's some of the iShare, iBox, iThis, iThat. Yeah, so all that digital stuff that it's now on the Federal Reserve's balance sheets, which means they're the owners of everything packaged within those products. So where are they going to head up in price? They're going to go up because the Fed is buying them. But anyway, I'll share that here if you guys want to find out more about that. But here's something else that plays right into the whole mortgage security aspect that I think you guys will be interested in hearing or seeing. It says home mortgage delinquencies soar by most on record in April. And so that's just a way of calculating, looking back at some figures. And of course, it will continue to grow even higher in May. And so it says mortgages at least 30 days in arrears almost doubled to 6.45%, the highest rate since January 2015, according to data compiled by Black Knight. It says about 3.4 million loans were more than 30 days late, and an additional 211,000 properties were in foreclosure or on track for repossession by lenders. So we have 211,000 properties that are on the market right now in foreclosure that, once again, it's all packaged up as somebody's asset who initially issued that loan that will need to be made whole. And so who's going to come in to put that on their balance sheet? Of course, it's going to be the Federal Reserve itself. So the Federal Reserve was already the biggest mortgage owner or real estate owner because of all the crap that they piled up here. But they're going to be adding to it even more. So eventually we might end up having to pay a mortgage note directly to the Federal Reserve because they're going to own all properties at some point as this stuff unwinds. So just something that I thought I would bring to your attention. And so I'll share this via the chat and then keep it moving right along and get ready to wind down and get ready for a holiday weekend of some kind. But other than that, as always, highlight at Rethinking the Dollar if you got any questions or any thoughts you want to chime in on. Any other articles out there relevant to this that you guys might want to touch on, feel free to point it my way and I'll pull it up. Everything for fake money, fake debt. This is just the beginning. Christopher, very true. Just the beginning. We're less than 90 days into the pricking of the biggest bubbles of all times and the Federal Reserve's response to try to reinflate or to plug some leaks. But they can't really plug leaks. All they can do is try to paper over things. So that's why, there cannot be any type of V-shaped recovery because of the 10-year artificial inflation of this bubble economy we're in now, which to me only spells, as one of my prior guests, John Gray, said, that there's going to be a Nike swoosh style recovery of where, you start up here, but then it's going to go way out here to where that Nike swoosh, my personal guess is several years from the market is dropping here and trying to pick itself back up or not in, it's going to be a couple years at best. And on top of that, with some restructuring of our monetary system along the way. All right, Spirit King, I see a cuss word that wasn't allowed through. Try to be nice, my friend. Not sure what that's about. It says, RTD, is there an update on the next stimulus checks? Also, how are you holding up with the broken dams in Michigan? Prabar, broken dams are about 2 hours north of me. I'm familiar with that town. I used to drive through it a lot in my younger years. And so Midland is a very small town that obviously was built well below the, I'm not sure if it's sea level or whatever, but, so that whole region of their downtown is right in that center. So not surprised, not sure what that's going to look like in the days ahead. But what's interesting is we had President Trump in the state of Michigan yesterday touring Ford, and I think I saw something about him signing some type of emergency relief like that. So President Trump swooped in to provide some funding just because as of now the spigots are on, so funding is available. But then I was thinking like, wow, Flint's been a head case. Flint's been a problem for 5, 6, 7, 8 years that we've known about it. And we've had now 2 administrations that seem to ignore that, of which they have to because they can't really address it because that'll be, $100+ billion problem. But, dam breaks, they get an instant check signing. Flint has to restructure how they do everything with, pipes. Yeah, anyway, I'm gonna leave that alone. But okay, so the last thoughts I'm gonna share was what happens to do with the stimulus stuff, and that's what I'm gonna end this off with. So we have not president, but let me pull this screen up here. So this is what's happening on the stimulus front. So Mnuchin says it's a strong likelihood for more virus spending. Of course, it has to be because of all the things I've just mentioned. It says, but Treasury Secretary reiterates Trump position to wait. And so this was as of yesterday, but yet article today mentions that Trump is ready to begin talking about how to provide relief for you. And so just to give you an idea, it says Treasury Secretary said Congress will very likely need to pass more stimulus legislation for the U.S. economy as the nation struggles to recover from the outbreak. So I like how they talk about the need to provide more stimulus for the U.S. economy. And it's not necessarily the U.S. economy they're referring to. They're talking about the bursting of all those fake products that have been sold to the world going belly up. And so the relief is actually needed for them on the surface, but they package it up by saying that it's for the economy and it's for the people. It says we're going to go step back for a few weeks with very carefully if we need to spend more money and how we're going to do that. It says the House passed additional $3 trillion. And then it says with the continuous downward spiral of unemployment claims, like these, the unemployment numbers can continue to go down. But yet the people who were heavily impacted is up in the millions. The people who will not be able to return back to their old line of work are the ones that will remain unemployed. Therefore, even if the curve goes down when it comes to unemployment, there's going to be issues for weeks and months, probably even years, because we're also shifting into a new working model in and of itself. So this is a big thing that they're going to want to try to look like they're trying to help and to ease. And then this leads to the very last article here. It says Trump administration. This was as of 43 minutes ago. And of course, CNBC, take it with a grain of salt. But it's the primary medium of getting a way to sample the narrative of the mainstream news. It says Trump administration warms up to sending out more relief money. So he's warming up to it. And I wonder why. And so once again, he's doing a little campaign tour. And you want to make sure that all the states that he's hinting, he's not necessarily trying to buy the vote of, but want to make sure that he reiterates the fact that he's out to help those in need. At the same time, he's telling people that the economy is going to recover. We're going to have a great second half and great 2021. And he built the economy up the first time. He could do it again. I'm thinking I thought the economy was strong. The markets are good, but they were in a bubble during the last administration. But I guess the fundamentals never changed. But anyway, so it says Donald Trump and his advisors said this week that another round of stimulus could be coming. Trump has in particular talking about a willingness to send more direct payments to Americans. So there's some type of talk, but it says Congress is divided over another response bill as the Democrats push a sweeping bill and the Republicans consider a more narrow approach. So The Democrats are talking about the 2,000 per person, per household, whatever. But the Republicans want a more moderate approach of trying to negotiate the figures for you and I. So there's restrictions on what they will be willing to give the public directly, but yet there's an unlimited amount of funds that they'll be willing to provide for the banking sector and all the mortgage-backed securities that are about to go belly up. Now there's an unlimited amount for that. But yet for you and I, they got to come to negotiations. And then to finish it off here, this is interesting. It says McConnell vows an end to enhance unemployment benefits. So no matter what, as McConnell mentioned, that is no way that we'll do anything that would allow people to be incentivized not to want to go back to work if they could. So that's going to be a snag between the Republicans and Democrats on how much would be enough for to consider relief as opposed to a allowance as they transition us into this UBA, or Universal Basic Allowance program that's coming. So that's kind of what's happening in the news. That's what I wanted to touch on this afternoon-ish. And other than that, that's what it is, man. So I want to check in and just share with you what's happening. And so as the leaks in the system continue to widen, they're painting over the top that there's relief that's going to be needed for you and I. But in actuality, behind the scenes, they're pumping billions into the system by the hour to plug up or try to, catch some of the liquidity and steer it towards the mortgage-backed securities, the ETFs, all the products that they sold to the American public throughout the last decades as financial investment tools or investment vehicles for you and I to acquire and buy and hold for the long run. They're having problems with that narrative, so now they have to prop it up artificially. And then that's when the whole idea, if you don't hold it, you can't get access to it right away, will allow people to realize that they really may not own what they thought they did in those portfolios of theirs anyway. So goes to show, if you can't get access to it right away, or if you don't own it or hold it outright, you don't own it, unfortunately. But that's I'm sure all you people who watching, you know that by now, so it's nothing new. And so anyway, if that being the case, I can rant forever, but I'm not going to. I appreciate everybody taking time to join me. If you've got any value out of this back and forth or the chat room, give it a thumbs up. And also connect with me on these social media platforms here. Information beneath this video. And also, if you guys want to be a blessing to the channel, as well as help bring people into the community, share this information so people can find out what's going on. Because once again, at this current moment, especially moving forward, if you get any information from a person that reads off a teleprompter as like being something that you can really count on, you already been lied to. And so once again, this is all my opinion, but I'm trying to read through the BS as best I can. So that's my goal, my job at this current point. But anyway, let's come back again, a different day, different time, and chit chat. And also looking to shake things up on the RTD side of things. I enjoy the interaction. Just talking about all these issues here and going over the mainstream news, it can get kind of tiresome at times just because we all know things are coming apart. And I want to get into more of the what can we do about it. And, of course, get your weight up is the most practical thing you can do. But what else out there can we cover? I'm open to ideas and suggestions on shifting the format a little bit. So, guys, let me know what you think. What are some other creators out there doing that you think is a value that I can incorporate here? I'm open to those ideas. So in the comment section, leave it there. Or if you have something unique, shoot me an email. Then that means going to rethinkingthedollar.com and share with me some information there. I would love to be able to read from you guys. Metho Nelson, appreciate the love offering to the channel, my friend. Thank you. But anyway, let's keep it moving. If that being the case, be blessed, be safe. I'll see you guys later. Enjoy your day, and looking to do a live stream tomorrow. So other than that, be blessed, be safe. Peace.
Hey there, sorry for this interruption, but I wanted to bring something to your attention. If you've been enjoying this live stream, why don't you partner with me and be a support to the channel via Patreon membership for just a minimum of $5 a month. All you have to do is scroll down beneath this video here, click the Patreon link, then consider donating as little as $5 a month towards the channel. A little bit of crumbs can go a long way, and I appreciate your support. Now, let's get back to this live stream. Hey there, hope all is well.